Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May 11th. Today is a day of PPI. PPI month over month came 0.2%, slightly lower than the 0.3%, but still in the positive, despite the fact that the previous one was 0.4% in the negative. That's month over month, year over year. For April, 2.3%, lower than the 2.4% that was expected, and still in the positive, lower than the previous one, but still we are still going higher. We are deaccelerating, but still going up. And that's one of the things that we have to really understand. Unless we see negative, we are not going lower. We are deaccelerating. That's decently good, but still not good news. Core PPI is as expected. I was expecting negative. The previous one was 0, but 0.2, still going higher. And core PPI year over year, 3.2%, still way higher. That aligned, and also along with the fact that initial jobless claims came higher than before, but continuing jobless claims is not as expected. We need to see producer price index going really deaccelerating, almost at 0 point something, also on the core part of that, and CPI yesterday was really lackluster, and that is why we are seeing this kind of choppy markets that don't want to go higher, and if they go higher are only going higher due to the fact that a couple of tech stocks are pushing higher that have huge weights on the indices. That's the reality. So open your eyes, because inflation is still going up. And also be careful, because we are comparing with last year's unbelievable high inflation. So for example, year over year of 4.9 compared with just last year's 8.8 or around that at this same month. That means that we are almost at 18% in 2 years. So open your eyes, be smart, because inflation is still there. Go shopping and see those prices. Those prices are not 0.4%. Those prices are accumulating month over month over month over month. And I don't know about you guys, but I don't see prices going down nor deaccelerating. This is just a mathematical trick that statistic analysis and analysts, economists are throwing to us. But the reality is that they changed the formula for the CPI, and the producer price index still show 3.2% increase. So come on. I'm really tired of these messages that inflation is, we are seeing deaccelerating, we are seeing a slowdown of, come on. Let's see the details, because look at this. This is a table for PPI, and we can see energy 0.8, transportation minus 1.7, nice, but still total for demand goods, that includes foods minus 0.5, but still less. Food and energy 0.2, that's a 0.2. Trade 3.5. I mean, unadjusted is 3.4. This is not good. Stop being complacent. Stop being, okay, maybe we are slowly going down. Come on, guys. Come on. Open your eyes. Be real. Wholesales 0.2. Less than estimates. Come on. I'm really tired of this less than estimated. Still going up? Yes. Bad news. That as simple as that. Rose just 2.3. Again, the media with this kind of mentality, trying to sell you that inflation is going down. Jobless claims jumped to 264, the highest reading since October 2021. Yes, But that's the initial. Where is it? That's the initial jobless claims. The continuing jobless claims that shows continuing pressure on the job market, on the labor market, is not going as expected. It's not going up. It's not really showing signs of, come on, we are going up. We are just stumbling. We are being complacent. We are following the media messages, the media statements, the media speech about all this inflation, that at the end of the day, the reality is that you go shopping, you go to the shops, you go to businesses, and it's still unbelievable high prices. So stop with the tricks about the formula, stop with the with the with the media showing things that are not really. This is just words by words. This is propaganda. So I'm really tired. Bank of England hikes 25 basis points again. No longer sees a recession. Well, 2008, we said that 2008 was mild recession, and we got the great financial crisis of the greatest financial crisis of the history. So no longer sees recession. Well, well. So bank rate 4.25 to 4.5. So central banks still going with hikes. European Central Bank still going with hikes, and they are saying that this summer are planning to continue raising by 25 basis points until maybe next year, 2024. Maybe they will stop, but there's no pause in the horizon. But again, in the US, we are all hoping for Fed to stop and to pause to support the economy. Bonds market are again 4.3% pricing in bonds market in December. 75 basis points cut this year. This is unbelievable. This is insane. Insane. Let's go with some earnings, because we got Walt Disney, we got some news of Google, and we have Robinhood. So first with Robinhood, the easy one. The easy one basically is that revenue and EPS beat. That looks nice, right? Decently, they reported revenue of 41 million. They also was 11% revenue in the first quarter year over year, and also options for 7% quarter over year increased, and crypto revenue was down, but 120,000 funded accounts. So looks like really solid number from Robinhood. I have my personal opinion about these guys. I don't like Robinhood, but this is decent numbers. So let's see in the charts how they behave, because they are up 4.42%. But let me tell you, this is the daily. I remember trading Robinhood around these levels after the IPO, trading some stocks when I was trading stocks. But once we broke this pivot on the IPO day, I mean, everything go lower and lower. And there's a lot of fundamentals regarding Robinhood. You all know how Robinhood operates with the payment for flow, and I don't agree with this business. And I think a lot of people are just, they hate Robinhood. That's why we are at lows with some kind of bottom, but bottom at 948 when it went to 85. So basically that's from its high, that's price range, that 89% down. So stop with Robinhood. Let's talk about Disney. More interesting. Disney streaming losses improve. This is a nice headline. Losses improving. Come on. losses improving. Well, I mean, this is clearly, let me, lost 4 million subscribers. So come on. Losses improve in our subscriber numbers decline. What the heck is this? Please, the media with this propaganda, with this BS. Come on. Bad numbers. Bad numbers. EPS flat, revenue a little bit higher, but total subscriptions 158 million versus the 163 expected. So a big miss on subscribers due to obviously other streaming services being around. So Disney is not doing well. Look at this. This was 4.8 in the overnight. And if we check right now, since yesterday, 8.74. Big hit on Disney. Disney got, as all the streaming services, a big push during the pandemic, but everything that goes up also went down. So this kind of business need to really rethink the way they build the business. They way stop putting ads and start thinking about consumers. That's my overall summary about this. Google is doing one thing good. It's basically just putting AI on every news that they got. So we got the new Palm large LLM, large language model for AI, new AI, Google's AI, generative AI. I mean, new chatbot Bard that was a disaster, if you remember, on the day they showed the press conference what this Bard was capable of. That was a disaster. And I mean, they also announced this 1800 folding phone, 1800. What the heck? I mean, are you able to buy these things? Yeah, I'm able, but I'm going to do this. Who the heck thought about putting this price tag on this thing? When households, when families, when businesses are on a big inflationary environment and consumers are really pressured, you put this kind of thing at this price tag? Well, as always, markets are not the real economy. And that's why Google is skyrocketing. That's why Google is on AI hype mode, as Microsoft was, as Nvidia and AMD were. Wow. I mean, I'm surprisingly tired. I like AI, but they are using this trick over and over, and they are just moving these markets. Google is 4.49% right now up on the day, while the rest of the Nasdaq is barely flat and struggling. This gap fill that we got yesterday after the news was really beautiful. Let me put it again and go on the 1 minute chart. So we fill this gap yesterday and we continue going higher and higher and higher. I mean, we did a lot of the work during the overnight, but it's holding its level. It's holding. So where are we right now on Google? I mean, 120, it's a really psychological critical level. And then we got 122, and this big previous support is now resistance. We already left behind this huge trend line, but I mean, Google is looking really strong. It's using tricks, but this is insane, the kind of expectations they put on the consumer side, trying to sell this folding phone for 1800 and try to sell a lot of services with AI, but this is nothing more than some fine-tuning of the Google services and Gmail and some docs, sheets and slides with AI chatbot. I mean, they are selling air from my point of view. They are selling air with a big price, by the way. So I don't know. We did a really interesting review, and let's focus on today's price movement. Nasdaq is, well, after yesterday's big a power hour move, we tried to go higher, and before the numbers of the PPI, we started chopping, we went down, and we opened really showing weakness. Let me show you something really important, because every day I tell you something. Have copper and Russel 2000 up every day and do your own diligence. Look at copper. This is really important. This is actually critical. Dr. Copper is a leading indicator of recession and slowdown on the economy. I was looking at this pivot, but after this consolidation, it was looking nice at this day, but then 1, 2, and today. So why? Well, we got CPI and PPI numbers. And copper basically is down almost 4% on the day. We broke down this previous support and we went through even to the next level at 3.7. I got charted also 3.5 down here, but yesterday I put this down here and we basically fell off a cliff. If we check the 5-minute chart, let me clean a little bit this white box. Let's keep that. The 5-minute chart, this was prior the open. This is during overnight. And then we got the numbers and we went even lower. We are now consolidating, but I mean, this is a sign of recession. But not in the midterm, or maybe we are going to enter recession. No, we are actually in a recession. So start thinking in that mode. Let's go back to the Nasdaq on the 1 minute, because knowing that I was short at this pivot, that was settlement price, and I expected way more. But down here, this blue dot line, this is last week high, and look at what we did. I was trying to hold for a bigger move, but I took profits, I don't know where. I took profits from this short, and I was basically waiting. I was expecting exactly these kind of things. Exactly this. So this is a bear trap. We go down last week high. A lot of people were looking to this level, and we went straight up. So the people short down here is just, they are sad faces. And 1, 2, 3 rejections, and then once we went higher, and I was watching this resistance area on the initial balance. This is the opening high of day. I mean, that long was really nice. I didn't take it, and it started again trying to grind. But when you try to grind with Apple doing these kind of things, with Microsoft minus 1% on the day, with Nvidia minus 1% on the day. But the tricky thing is that Amazon is up 2%. 2%. Consumer discretionary, 2%. So Amazon is actually going nuts towards this 114. And let me tell you, a lot of tech stocks are basically at these kind of critical levels, and I think what we are going to see is this. Beep. Beep. Mark my words, we are going to see heavy selling into a bull trap. And my only reasoning, and big reason, is due to copper going big down, dollar resolving to the upside in this 2-hour accumulation. We are not stopping at this fib retracement, nice long, by the way. We bottoming, and we are going towards this daily descending resistance that we are actually putting with this nice structure. And I really think dollar is prepared to do nice moves to the upside in conjunction with a slowdown of the economy due to copper and Bitcoin. Look at this. I was also talking about this these days in my videos. This support is the same kind of support that we got on copper, but Bitcoin is just kissing this level. So be prepared, because this might be distribution and we might see a big down move towards this ascending, but still risk off. Russel is just rejecting. Is in the middle of the range, but rejecting. And I don't know how else I should be sharing this. I don't know how to convince you that I don't think the Nasdaq is really is going to be able to hold. Apple is just in the middle of nowhere land after this huge gap. Again, critical spot. We might see this. People start freaking out, and then the big pain. The big pain. Crude oil minus 2.40% after this big bull signal. I mean, crude oil is just following demand, and there's no demand. Demand destruction. All this downturn, and with this, I was expecting maybe 76. This is a bigger of a pullback, but still at 70. There's a lot of signals, a lot of indicators that are showing you that the economy is sick, is really sick. 2-year yield still holding, but today minus 1%. The 10-year yield, the most important yield, still at this. Do you recognize this kind of setup? Is the same as the 2-year, is the same as copper was in here, is the same as Bitcoin trying to hold. I mean, be really careful, because I think today, due to copper, we are seeing a really important day. We got all the data. We got CPI, we got jobless claims, we got PPI today. Some people are on hopium and hoping about the economy is nice, but Backwest still 22% in the red, and all banks except Bank of America, that is 0.04%, are in the red. All banks. And on top of copper breaking down, on top of big tech stocks being hyper valued and banks going all red, on top of those, that's the debt ceiling, the debt limit that the government is not able to solve. And there's 20 days left until June 1st. That's the due date in which Yellen, Secretary of Treasury Yellen, said that we might find a lot of trouble. So be really careful. Be really careful, because market is not telling you, it's just already yelling, we are sick. The economy is seeing some really important signals to the downside. So that's, if you have to take something from my video, just take this chart. Copper broke down. There's still a couple of hours until the close, but still hovering 4% down on the day. Dollar is preparing a big move, and a couple of tech stocks are still flying. So I'm not going to be the guy that buys anything, not even Nasdaq futures at these levels. So I will wait. I will just wait for my opportunity to really see signs of the market really turning down. It's quite tricky to see things when the only thing that you see is just people pumping on big tech stocks due to injections of volume of Fed money, and things like that. But at some point, I mean, we might see things start to be annihilated. And this is a big indicator, Copper, that something is starting to move to the downside. Something is cooking. So be really careful. Be really careful. Apple in the red, Microsoft in the red, Tesla barely in the green, and Amazon and Google are the only ones that are holding, and Meta holding somehow the Nasdaq. And holding the Nasdaq is holding the overall market. But let me tell you, the S&Ps are down 0.5%. And this is a very different chart from the Nasdaq. Nasdaq is just going higher. S&P is just in the middle of nowhere of the range. And I mean, this doesn't look really nice. Once we break these pivots, I mean, we are going to see a big retracement probably around here. This day level, these bottoming tails, things like that. And percent of stocks about the 200-day moving average. Look at this. I did a YouTube short, I did a video. If you didn't notice, just take a look at that video. Noticing this 67% at S&P's highs were at above 200 moving average. I did a video here, April, with 48. S&P is going higher at the same level at this one, with 48% of stocks going higher only. Now, we are again these big levels, at these levels, with only a fraction of stocks. This is called breadth. Only 40% of stocks are above the 200 moving average. That means that just a handful of stocks are moving the market. The big tech, the big corporate greed are pushing higher to some critical levels. I don't know why, but people are following on FOMO. They will be destroyed. And those are my last words. They will be destroyed. If you found this video useful, please click the like button and subscribe to the channel. Thank you for your time as always. And remember that I upload every single day videos for market forecasts, market updates, and market recaps like this one. Be really careful, guys. I've seen a lot of signals that are red, big red, huge signals. Discipline and risk management and patience, be patient, react. I'm reacting to this. What's your reaction to this? Be smart, be disciplined, and I hope you enjoyed this video. Stay safe, everyone, and see you tomorrow.